Can you get more granular with us about what assets over what time frame in which markets? Because the problem is that a lot of people have sat on the sidelines and feel dumb because they took their money out too early.
I agree, and one of the things that we've been telling clients is this is not a market for broad strokes investing where you make big macro calls and then you move your portfolio around. It's rather a market to be extremely selective, also, as you say, within the asset classes. So, for example, areas that we continue to like technology, but we like it when there is intellectual property, when there is exposure, for example, to AI, exposure to some of the specialized semiconductors. We like areas like utilities. You've seen utilities have a very disparate performance as of late, and many utilities companies have come down even at the time when there was an expectation that rates would actually start coming down. And we like areas from a geographical standpoint, such as Japan, where you have a very strong idiosyncratic risk and opportunity of companies that are returning money to shareholders and also improving their operations. And in truth, we like also this market, the UK market, where companies are actually showing very strong resilience and effectively very cheap valuations.
Fabiana, for many years we were told not to time the market, and then something changed. Then we had this old tactical or dynamic type of approach to investing that's come to the fore, even for long-term investors. I can see that you're holding a higher than average amount of cash. You're talking about getting ready for some tactical opportunities when they come. What are you waiting for? What are you hoping to see on markets that get you more involved in, say, equities?
Let me give you an example of tactical opportunities that we're taking advantage of. When we had the whole issue about banks in the US, we actually started buying banks outside of the US, where we felt that those banks had enough liquidity, had enough regulations on them in Asia and in Europe, where we felt that there wasn't the same issue that we were facing in the US. And you've seen that some of those banks rebounded. Same when we saw the very big differential in spreads between European IG investment grade credit and US investment credit that now has come back in. But those were distortions in the market where you could take that opportunity to go in and make volatility your friend.
You could argue that there have been distortions in the tech world as well, sectors that have sold off very aggressively and taken with them pretty much all the stocks in the basket. We've got earnings season, we've had some strong reactions even after hours overnight. Are there tactical opportunities you're watching for in tech as this earnings season unfolds?
There are probably less tactical opportunities than there were in the past because the tech world is really it's taken to different directions. You have the intellectual property, the very strong companies, the free cash flows, and then you have those companies that don't have earnings and probably will not have them for some time, and they have to fund them. And the cost of funding right now, whether on the market or from banks, provided that they will give you that credit, is very high. So we continue to go after companies where we see that intellectual protection, we see those cash flows, and they're generally the larger, stronger companies that can also invest a lot of capex in innovation.